Watch out for the bull trap in US equities. This short-term choppy pullback is likely far from over. Last night, the Nasdaq and S&P gapped down and rallied, with the storage sector bouncing hard. But I don't think we've actually found about him. We've already seen 3 consecutive days of selling. There's a golden rule in the US market. When it reaps for days. When it dumps for days. This isn't superstition. It's dictated by the homogeneous algorithmic trading of Wall Street institutions. Whether they're accumulating or distributing, they execute in trenches over several days. Okay, looking at the tape, smart money is likely orchestrating a rounding top distribution, pumping it while quietly offloading. They're deliberately creating the illusion of a hard floor, constantly luring in deep buyers to hold it back. Why do I say this choppy pullback isn't over? First, tonight's 20-year Treasury auction. If you spike past 5.2%, tech stocks are going to stay under massive pressure in the short term. Then the FOMC minutes dropping in the early hours. If the Fed flash hawkish signals, the market will have to aggressively reprice its rate cut expectations. And tomorrow, Nvidia's earnings. Based on historical momentum, even if their guidance crushes expectations and hits $90 billion, given the current macro backdrop, we're highly likely to see a sudden news dump in the short term. Okay, now let's talk gold and silver. A couple of days ago, someone in a comment said 4,500 was an iron floor for gold. Well, the Asia session just slides right through it today. So remember, beneath an iron floor, there's always a diamond floor. Stop trying to blindly catch falling knives in a heavy downtrend. Why are gold and silver getting absolutely hammered? Aside from spiking treasury yields I mentioned before, the probability of a rate hike has reached a critical threshold. According to the CME Fed Watch tool, the odds of a Fed rate hike this year have crossed 60%. This is the first time this year it has broken over 50%. It's spooking capital into a massive liquidation. Okay, look back at how the market react during the 2022 Fed hiking cycle. Gold suffered a maximum drawdown of over 20%. Combining that with the current macro environment, this gold pullback will highly likely go past the psychological 4,000 level. And finally, back to crude oil. Trump just issued a fresh warning saying the US might have to strike Iran again. Given a strict 2 to 3 days, the geopolitical powder keg is fully primed. Overnight API data show a massive 9 million barrel draw in US crude inventories, accelerating the depletion rate. And meanwhile, the SPR strategic petroleum reserves saw a record high drawdown last week. Total inventories have crashed to a 2-year low, leaving only a few days of reserves. The supply squeeze alarm is blaring. The next 48 hours will dictate the dictionary breakout for oil. We're highly likely to see a violent upside rate. At a juncture like this, completely stuck with macro events and fierce capital battles under high inflation, treat my analysis as a wake-up call. I don't have a crystal ball. Respect the market and manage your leverage. Watch more, trade less. It's never too late to pull the trigger once the trend is actually clear. Okay, as always, this is just my personal trade analysis, not financial advice. And also, shout out to EBC Financial Group for sponsoring content.